I would just simply say that ultimately, gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever. As you look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year Treasury. I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the Treasury. Read Zoltan Pozsar. This is Bretton Woods 3, all about commodities.
Some modest selling pressure in the US dollar is helping gold and silver prices find their footing at the start of the week, following robust volatility last week. On Monday, the Bank of America put out a note suggesting that gold could hit $3,000 an ounce over the next 12 to 18 months. The lender said the key is investment demand. Andy Schectman, president of Miles Franklin Precious Metals, argues that countries increasingly turn to gold as they move away from US Treasuries. He predicts this trend will continue, likening it to a new era similar to Bretton Woods 3, centered on commodities. Based on his observations, Schectman notes that gold has now replaced the euro as the second-largest asset held by central banks, with an 18% allocation. According to Andy Schectman, gold, silver, and commodities are replacing traditional assets, which will drive their prices much higher than what Bank of America and JP Morgan predicted. Experts have said that demand from central banks and retail investors, geopolitical uncertainties, persistent inflation, and the anticipation of interest rate cuts support a positive outlook for gold in the second half of the year. Regarding the official 3% CPI figure, Schectman distrusts it, noting that real-world prices show a different story. He sees the inflation narrative as politically motivated and questions how the government will manage escalating debt, suggesting true inflation will soon make a 2% target unrealistic. Gold prices rose 1% on Thursday from an over 2-week low hit in the previous session as the dollar softened, with the market spotlight on key U.S. inflation data for more cues on the Federal Reserve's interest rate path. Making gold more attractive for other currency holders, the dollar weakened 0.3% against a basket of currencies, while benchmark 10-year yields fell to 4.2845%. Now, we present the clips of Andy Schectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think that does. And then you take 3,000 and divide it by 42, which has been, the average price ratio of the last 100 plus years. You get 71 and a half bucks. Divide it by 7 and you're almost to 400. That would be what it's coming out of the ground at. I think it's just fair to say that gold and silver are two of the only assets that haven't been allowed to find fair value when everything else has been distorted to the upside. Price discovery hasn't really happened in gold and silver for the numerous reasons we've enumerated before. But I think, ultimately, those are numbers that I think are certainly realistic and maybe a whole hell of a lot higher. I guess I'll say this. There are very few absolutes that you can talk about in finance. I've learned in 34 years, maybe the only absolute I can give you is that bull markets go higher than anyone thinks possible. Look at the Dow. When I started, it was 2,100. And bear markets will fall further than anyone ever thinks possible. And I would look at the Nikkei, which was 40,000 in 1990, or pretty damn close to it. And it's just now getting back to where it was. I know it bettered it for a moment recently, but it's taken 34 years to do that. And it's still just barely there, if not just below it, at a period of time where interest rates in Japan have been zero bound forever. So even with 0% interest, you can't entice the public who was burned so badly to go back in to the Nikkei. And so I think when we look at gold and silver in the scheme of things, this is I think a massive shift, once in a generation shift away from the dollar. And so, sky's the limit, I guess, but it won't be easy and it won't be smooth and it won't be just straight up because of the obvious ramifications of all of this. So you got the West hanging on, doing all they can to shake people from the bull. Bull wants to take as few people along for the ride as possible. But when you realize that, gold right now has replaced the euro in terms of the second largest asset held by central banks right now for the first time ever, 18% allocation to central bank holdings, if we believe those numbers, the writing is on the wall. Gold and silver are replacing many traditional assets along with other commodities too. As Zoltan Pozar says, this is about real commodities, no longer promises from countries that are bankrupt morally, socially, and actually. And I think that portrays for much higher prices in gold and silver, even than Bank of America or JP Morgan optimistically are telling us. I don't care what the CPI says. I can't think of hardly anything that's only up 3% like they're telling us. I was just in Las Vegas, and although we stayed at the Wynn, which is great, that Sphere is incredible, by the way. A cheeseburger, French fries, and a Coke delivered to my room was $74. Dead serious on that. I mean, I wish things were only up 3%, but I think that the likelihood of inflation getting down to those levels is next to nil. I mean, the 3% inflation they're telling us is fugazi. The money creation is off the charts. The metrics by which they gauge inflation are distorted. And, remember, they told us originally there was no inflation, and then it was transitory. And, well, they told us there'd be 4 rate hikes or decreases, rather, for sure, the beginning of the year, and now maybe 1. And if they do that 1 towards the end of the year, it just reeks of it being politicized to keep the Democrats in office, to get that run up of the market prior to the election. But yeah, I think those days are long over. Like I was saying earlier, how do you pay these unfunded liabilities? Where does the money come from? You're creating $1 trillion in debt every single month. How is inflation only at 3%? Where is it hold up? Is it all in the equity markets? Is it in the treasury market? Where is it? And when it finally starts to rear its head in the real economy, it's impossible to say that inflation will get down to 2%. I can't believe it.
Regarding the U.S.'s increasing debt and fiscal disorder, Andy Schectman mentions that gold and silver will rise significantly. He predicts that all tax revenue will soon go towards entitlements and debt interest, leaving no funds for the military, highlighting the need for stable alternatives like gold and silver. Since 2020, debt to GDP levels have been higher than ever since the late 1940s. At $28.2 trillion, the total federal debt held by the public is projected to be 99% of GDP by the end of 2024. Furthermore, Schectman emphasizes that the U.S. fiscal challenges will lead to a push for precious metals. He predicts that current estimates are too low as foreign interest in US Treasuries declines, and the desirability of these assets decreases. Let's get back to the interview.
Everyone talks about the price of gold and silver and inflation and soft landing and all of the noise, but let's break it down and make it real simple. I mean, look, we're adding $1 trillion in debt every 100 days, and we have 150 trillion in unfunded liabilities. The national debt is up 11.5 trillion since 2020. This is a country that has its fiscal house not in order. And when you look at the unfunded liabilities, who's going to pay for them? When the Congressional Budget Office says in 6 years, 100% of tax revenue goes just to pay mandatory entitlement and interest on the debt only, when you realize military spending is discretional, who's going to fund our military? So we have a situation that is it's not, we can't continue down this path, put it to you that way. And so I would just simply say that ultimately gold and silver go higher in the face of a dollar that falls. And I don't know if it's gold and silver going higher as much as what JP Morgan is saying is that the dollar has to fall. And that's really what I think ultimately will happen. Now, when you look at what's happening around the globe, the de-dollarization, the de-treasurization, a growing union of countries, as we've talked about forever.
De-treasurization? Is that a new one?
De-treasurization, yes. Well, I mean, that's what they're doing. Why would anyone want to hold treasuries? You look at gold, it's up 9.9% on average for 25 years. That's doubled the pace of the 10-year treasury. And we've proven to the world that we don't like what you're doing. We'll take your treasuries and might even give them to the country or buy weapons with the proceeds and give to the country you're in a war with. That's a very tough thing to come back from. So I think ultimately it leads to more of the same. Countries seeking alternatives to the dollar, seeking alternatives to the treasury. Read Zoltan Pozar. This is Bretton Woods 3, all about commodities. And it's also a country that has obligations that will be very difficult to meet just from tax revenue. So where are your options? Raise taxes, print money, and selling treasuries in an environment where there's only $8 trillion in treasury holdings that are foreign held. The majority of it is owed to us. Foreigners are not really keen. Now, there are some countries, if we are to believe that UK and Ireland and Cayman Islands are keen on holding our treasury debt, but the ones that have been responsible for funding our spending binge seem to be moving in another direction. So yeah, ultimately, I think those numbers might even prove to be low. Ultimately, gold and silver go higher in the face of obligations by this country that can really probably only be met through printing of money or monetization of bonds. Same thing, because just no one wants to hold our treasuries because of inflation risk, default risk, and outright confiscation risk. And I think that's really where it is in its simplest of terms. So yeah, I don't think we've seen anything yet, I guess, is the bottom line. And I'm happy with those numbers, but I would think that they could actually be much higher.
Some analysts have said that gold and silver's elevated speculative bullish positioning creates some risks that could test lower prices. However, analysts have added that in an environment of heightened uncertainty, any significant selling pressure could be seen as a tactical buying opportunity. Considering these insights, what will be the most significant factor driving the rise of gold and silver in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.